Economic status or results. When we talk about economic status, we talk about a statement of profit and loss. It's a financial statement that shows in order how the result of the exercise was obtained during a given period. This also tells us about the sales, cost or expense and taxes generated by the company during a year. Operating result of the company. This is the most important result category. In this, we can see earnings before taxes and interest. It means how the company works and if we have to do any change or we have to take any decision to change our activities. Operating costs. In operating costs, we have all the costs that an enterprise has to pay in order to produce a product or a service. And we have fixed costs and variable costs. For fixed costs are all the costs that never change. It's an amount the company has to pay every month, like basic services or maybe a rent. And when we talk about variable costs, are all the costs that change when the production changes too. For example, our variable cost won't be the same if we produce 100 units and if we produce more or less than that. Financial results. The financial results are those that comes from early payment discounts, interest and related expenses, exchange differences, and results of the period. When we talk about results of the period, we're talking about of the exposures to inflation. Balance. The balance is the financial report that reflects the situation of the assets of the company at a given time. In this report, we can see everything but in a resume. Now we're going to talk about the assets and passive. The assets are those that are the total of the resources available to the company to carry out its operations. This represents all the assets and rights that are property of the business. And when we talk about the passive, those are all the debts and obligations the company have to comply with. It is important that a company has more assets than liabilities, as it tells us that the operation of the company is adequate. But many times, when a company has assets that do not generate money, it means that it has assets in leisure, and this can represent a loss for the company. Common actions. Common actions is a corporate form of property equity of a type of security. When we call this as common, it's because we need to make a difference from preferred shares. Preferred shares. They are called preferred shares because they have priority over common shares in the payment of dividends. When we say this, it's because company has to be always following this, and also they are subordinated to the payment of bonds or obligations. So this helps a lot to the company.
Selling credits. Commercial credit is used by enterprises to make the product selling easier and to give payment facilities. It works as a price. However, this account could hide unpayment amounts of money. It's important to analyze the collections of money during the last periods of time. See if there are clients who haven't paid on time and look if there is any other fact that could lessen the credit potential. Depreciation methods. Enterprises use plants and equipment to produce goods. These assets could lose their value and weight of time. This will be considered as production cost, so it must be moved from the income statement. There are some methods that can be used in order to divide goods costs through their useful lives. Research and development cost. A lot of companies consider that research, development, and publicity costs as current cost. It means during the current term. However, sometimes these costs seem more as an investment than a real cost. A publicity cost objective is to have more sales in the future. Research objective is to create a new product. In both cases, the companies get money back. So, you spend money today, but you will recover it tomorrow with profits. Currency devaluation. This is another important fact that affects the economy reports, because its consequences appear in short periods of time, and the income transfers will be extreme. For example, a company that exports part of its production and have its debts in local currency, at first this company will get benefits if there is a currency devaluation. But if this is a company that imports goods from another country and has its debts in foreign currency, the situation will be the opposite, and the economy results will be affected on different ways. Taxes. In finance, almost all decisions involve taxes. The state takes a portion of this cake that represents the company's incomes. There are many situations when financial decisions could create a value, such as the capital structure decision, where the debt offers advantages because laws allow taxes to be considered as the cost of the current term. There are some other possibilities to reduce the taxes consequences in the society, but the basic ones are: first, the prices inflation affect always to reduce the taxes impact to the profit. Benefits will be recognized at the beginning of the first term and the losses at the end. Second, it's always convenient to have patrimony at the end of the term. Best small assets values. Third, the best choice of the end of the period for the company. Risk transfers. Risk can be seen on any of the next 5 periods, and if they aren't, then they will be lost for the company. When it's an amateur company, the results on the first years won't be the best. That's why the spending could reach a redundancy. Then it will be divided through many years and could help to reduce the taxes consequences on future profitableness.